This is JoAnn Alumbaugh reporting for Farms.com, and we're talking with Steve Meyer, who is president of Paragon Economics in Adel, Iowa, a neighbor of mine. And we've made this a regular event every Iowa Pork Congress, haven't we, Steve, in trying to get an update and an outlook for the pork industry.
Well, yeah, we have, and so this year is a little better news than I've been able to deliver in some years past, as the profit outlook for producers looks pretty good right now. Feed prices, of course, are not cheap by any means, but they have dropped since last summer, and it's reduced cost of production. And right now, the futures market and my analysis of what I expect for prices this year says it should be a profitable year.
You going to give us any prices or what you might predict for each of the quarters?
Well, I will in the presentation today. Kind of mid-80s here in the first quarter, up into the mid-90s for the second and third quarter, and back down around 80 for the fourth quarter, right where kind of the futures markets are at the present time. So I don't think there are really any pricing opportunities to be had at the moment relative to where I think cash hogs are going to be, even though producers that might have a tough balance sheet or something like that might want to lock in some profits on at least a part of their hogs for this year. But it certainly looks like a year that's going to be much like last year, slightly higher production, so we're thinking a little bit lower prices. But the keys to this year are going to be exports. Of course, 2011 was a remarkable year. And then also the prices of competitor goods, especially beef should go higher the second half of the year and could go quite high given the supply situations we're going to face. And eventually we have to think these reductions in the chicken business are going to get some traction on the price side.
Well, you mentioned exports, and really now with some of the free trade agreements, that may be even better this year than it was in the past, do you think?
Well, I think it could. I don't think the free trade agreements are going to come to bear quite that quickly because they get phased in over 10 or 15 years. Even though we'll start working on the Korean free trade agreement, as I understand, in February, and so those tariffs will start down. And so that makes our product more competitive in those markets, and that'd be true in Panama and Colombia as well, even though Korea is by far the largest of those. So, you know, long term, the free trade situation certainly helps us. The dollar, I think, even though it's strengthened some recently, is going to remain relatively weak, and so that leaves our product in very good price situations. And now the leverage of the Korean free trade agreement has even the Japanese maybe talking about a free trade agreement. And so now you take that and take away the gate price that we have to get over to go into Japan, and you open up a completely new opportunity there too. That's a long way off, but this is what happens on free trade agreements. You get one and it provides an incentive for some others, and I think that's what we're seeing in this talk about a free trade agreement with Japan. That has a lot of hurdles to get over here domestically, though.
Well, when prices are good, we almost always see expansion. Do you think we're going to have that same phenomena again this time? Well, yeah, we can't stand prosperity. But the expansion so far has been very muted. I mean, the breeding herd was up 0.4% in December. It was up, I think, 0.7% in September versus a year ago. Not a lot of growth going on. We know that Cargill is repopulating the farms in West Texas. They've mainly been multiplier units so far. The commercial parts of that will be put in later this year. So that could add 1 to 2% to the breeding herd over the next 2-3 years. I've heard of a few sow units being built, but the response so far is pretty muted, and I think people realize, you know, you can't get out ahead of this. The real caveat I'd offer on any expansion is we need to be real careful about slaughter capacity, because it's going to get a little tight this fall, and it could get very tight the fall of 2013. We're hearing more talk about a new plant in Moline, Triumph Foods in the Moline area. Maybe they'll finally get started on that. We've heard that talk for a long time and haven't seen it yet, but we are going to need some more capacity if we're going to increase numbers very much. Well, Steve, I always enjoy talking to you and getting your perspective on the pork industry, and more often than not, you're right on. So I appreciate you joining us today.
Thank you. I'm afraid you may have a short memory there, JoAnn. Thanks.